At age 11, he bought his first stock. At age 13, he filed his first tax return. By 30, he was already a millionaire. And today, he is one of the richest investors in history. But here's the surprising part. He didn't invent a new technology. He didn't build a social media app. He didn't trade crypto. He didn't day trade Forex. Instead, he used a simple strategy most people ignore. This is the story of Warren Buffett and the principles that built a $100 plus billion empire. Warren Buffett was born in 1930 in Omaha, Nebraska. From a very young age, he was obsessed with numbers and business. At just 6 years old, he was already selling chewing gum and Coca-Cola door to door. At 11, he bought his first stock, City Service Preferred. He watched it drop after buying it. He panicked. He sold when it recovered slightly. Soon after he sold, the stock skyrocketed. That mistake taught him one of the most important lessons of his life. Patience is more powerful than emotion. By 13, he was delivering newspapers and earning so much that he filed a tax return, claiming his bicycle as a business expense. This wasn't normal childhood behavior. This was obsession. In the 1960s, Buffett bought shares of a struggling textile company called Berkshire Hathaway. At first, it was just a cheap stock. But when management tried to undercut him, Buffett made a decision out of emotion. He bought control of the company. Later in life, he admitted, buying Berkshire was a mistake. The textile business was dying. But here's where genius comes in. Instead of quitting, he transformed Berkshire Hathaway into a holding company. He used its cash flow to buy other businesses. Insurance companies, Coca-Cola, American Express, Apple, railroads, energy companies. What started as a failing textile company became one of the most powerful investment vehicles in history. Buffett's success wasn't luck, it was discipline. Here are his core principles: buy wonderful businesses. He once said, "It's far better to buy a wonderful company at a fair price than a fair company at a wonderful price." He looks for strong brand, consistent earnings, competitive advantage, good management, holding period, forever. While most traders look at charts daily, Buffett looks at businesses over decades. Time is his biggest weapon. 3. Circle of competence. Buffett only invests in what he understands. He avoided technology stocks for years because he didn't fully understand them. He doesn't chase trends. He waits for clarity. Emotional control. Markets go up, markets go down. Buffett once said, greater than, be fearful when others are greedy, and greedy when others are fearful. When panic hits the market, he sees opportunity. When everyone is excited, he becomes cautious. That emotional discipline separates investors from gamblers. Although Buffett hasn't written many traditional books himself, several powerful books reveal his thinking. The Snowball by Alice Schroeder. Buffett, The Making of an American Capitalist by Roger Lowenstein. The Essays of Warren Buffett, compiled by Lawrence Cunningham. These books show something powerful. Buffett isn't just smart. He is consistent, year after year, decade after decade. Compounding didn't just grow his money. It grew his reputation. Here's something shocking. Most of Buffett's wealth came after age 50. Why? Compounding. When you earn returns on your returns and then earn returns on those returns, wealth accelerates. Small percentages over long periods become massive numbers. But most people quit too early. Buffett didn't. He stayed consistent for over 70 years. Despite his wealth, he still lives in the same house he bought in 1958. He drinks Coca-Cola daily. He prefers simple meals. He doesn't chase luxury. He chases value. Money for him was never about showing off. It was about freedom and intelligent decision-making. Warren Buffett's story proves something powerful. You don't need complex strategies, constant trading, market predictions, trend chasing. You need patience, discipline, long-term thinking, emotional control, continuous learning. The biggest lesson: wealth is not built overnight. It is built quietly, slowly, consistently. While others chase excitement, Buffett built an empire through simplicity. And maybe that simplicity is what makes it extraordinary. If you enjoyed this deep dive into financial history, subscribe for more stories about the world's greatest investors and entrepreneurs. Next episode: the man who taught Warren Buffett, Benjamin Graham.